Hello everyone, I am Dr. Kotha Anil Kumar, Assistant Professor in Management, Department of Mathematics and Management, VJEC JYOTHI Institute of Engineering and Technology, Hyderabad. So we are going to know about the journal entries. So how to write journal entries and what are the rules, what are the basic requirements to write journal entries, we'll see in the present PPT. So first one is coming to the classification of accounts. So whatever the things available in the universe are comes under these three accounts. Classification of accounts. First one is personal account. Personal account deals with names, individual, firm names and representative person's account. So name of the individuals. Best example for names of individual: Rama account, Krishna account, Suresh account, Ramakrishna account. Next one is firm. All business firms comes under personal account. State Bank of India account, More Supermarket account, Bank of Baroda account. So these are all comes under firms. Representative person's account. So outstanding salaries, any amount receivable or payable to the outsider, that comes under outstanding. So that comes under representative person's account. So these three comes under personal account. Next one is real account. It deals with the purchase and sale of assets. Purchase and sale of assets. So what do you mean by asset? Anything which gives long-term benefit, that comes under asset, or anything whose benefit extended more than 1 year, that comes under fixed asset. Whose benefit below the 1 year, that comes under current assets. Example for assets: buildings. Next one is furniture, motorcycle, vehicles, patents, registered trademarks. These are all comes under assets. Next one is a nominal account. It deals with all expenses and losses and incomes and gains. So generally, while recording nominal account, we consider only repetitive expenses and repetitive incomes. Expenses which are paid periodically, that comes under nominal account. So I think you have a doubt. So whenever you purchased any buildings, so that comes also expenditure. Whenever you paid salary, that also expenditure. So payment of while purchasing building happens only one time. So non-repetitive items. So all non-repetitive items comes under real account. Next one is repetitive items. Expenses or incomes which are paid periodically, that comes under nominal account. Next one is coming to the rules. So there are rules. So every transaction is recorded twice. One is on the debit side, second one is on the credit side. So this is the pro forma of account. So this is a debit side, this is a credit side. So every transaction is recorded twice. One is on the debit side, second one is on the credit side, according to double aspect system. Coming to the rules of personal account. Personal account rule: debit the receiver, credit the giver. A real account: debit what comes in, credit what goes out. Nominal account: debit all expenses and losses and credit all incomes and gains. Whenever you want to prepare journal entries, these rules are very important. Remember these three rules. So whenever you want to write the journal entries, so you need to follow three steps. First one is first ascertain the two accounts involved in the transaction. Second one is then see the nature of accounts. Then apply the corresponding rule. So here is one example. So first one, 1st January 2019, that was the transaction happened on that date. Car purchased for cash for rupees 2000. So first you need to identify the exchanging items. Here exchanging items are car, next one is cash. So car comes under asset, means whose benefit more than 1 year. Extended more than a year, there is a chance to generate revenue from that asset. So that comes under asset. Car comes under asset, cash also comes under assets. So all assets comes under a real account. So there are three accounts already we discussed in the last slide. Personal, real, nominal account. So all assets comes under real account. So real account. The third step is apply the real account rule. The real account formula is debit what comes in and credit what goes out. So we'll write the transaction. So debit what comes in. So whenever you are in the business, whenever this, suppose if this is the business. So debit what comes in. What is the rule of real account? Debit what comes in and credit what goes out. So apply the real account rule. Debit what comes in and credit what goes out. Whenever you purchased a car, so car is coming into the business. Car is coming into the business and cash is going out from the business. Car is coming into the business, cash is going into the business. So apply the receiving aspect first. What is the receiving aspect to the business? So receiving a car, that comes under asset. So that comes under real account, right on the debit side. So this is the pro forma generally that contains 5 columns. So journal entries. So journal entries, first one is a date, particulars, ledger, folio, next one is debit rupees, next one is credit rupees. So date, particulars, LF, debit rupees and credit rupees. So first one is write the journal entries. First write receiving aspect. So write the come to the journal entries. Journal entries. So write the date. So happens on 1/1/2019. So write the receiving aspect first. Car account debtor to what is going out? Cash is going out from the business. So in car, how much worth of cash car received by the business? That is the value of the car is 2000. And how much cash is going out while purchasing? 2000 rupees. So debit 2000 worth of car received by the business. At the same time, 2000 cash is going out from the business. So like that, we need to record both receiving aspect and giving aspect. Next one is second example, buildings purchased for cash 15,000. So first step is identify the exchanging items. Exchanging items here, first one is buildings, next one is cash. Buildings comes under assets, cash comes under asset. So all assets comes under real account. All assets comes under real account. Apply the real account rule. Debit what comes in, credit what goes out. So first write a receiving aspect to the business. While purchasing buildings, what are coming into the business? So receiving aspect is buildings. So giving aspect is payment of cash. So first write buildings in the journal entries. So first one is buildings. Buildings account debtor to what is going out from the business? Cash. So ledger folio, generally we not use this ledger folio, nothing but page number. So 15,000 worth of buildings received by the business. At the same time, 15,000 worth of cash is going out from the business. Like this, we write all transaction. After completing the journal entry, you need to narrate the transaction, what purpose that transaction drawn. So being buildings purchased for cash. In debit column, write 15,000. In credit column, write 15,000. The same way, third example, cycle sold for cash 10,000. So first step is identify the exchanging items. So first cycle. Next one is cash. Exchanging items are cycle and cash. So cycle comes under asset. Cash comes under asset. So all assets comes under a real account. Real account formula is debit what comes in, credit what goes out. So whenever you are selling any asset, so receiving aspect to the business. Receiving aspect to the business is cash. So giving aspect, so what is going out from the business? That is a cycle. So write the entry. So cash account debtor to cycle account. cash account debtor to cycle account. So in debit column 1000, in credit column 1000. Like this, we write all journal entries by applying the consent rules. So like that, follow the procedure. Journalize the following transaction. Land purchased for cash. So land purchased for cash. First identify the exchanging items. So cash, next one is land. So land, receiving aspect, receiving of land account debtor to what is going out, cash, land account debtor to cash account. Gold sold for cash, receiving aspect is cash, giving aspect is gold, cash account debtor to gold account. Furniture account, furniture sold for cash, cash account debtor to furniture account. So like this, we write all journal entries. These are the entries. Thank you all.